All right, everyone. James Conley here with Conley Consulting Real Estate IQ. I want to go and make a quick video here because, well, that's a lie. It's going to be a really long video, actually. So this is going to be the first time I'm doing one of these, certainly this length. Real quick, want to go and cover some questions. Did you know before a realtor could even show you a home that you now have to enter into a buyer agency agreement? Two, with that, are you worried that going and hiring a buyer's agent is going to go and cost you thousands out of pocket? Three, what if I told you there's a way to save money not only on the actual purchasing your home, but if you set up your buyer broker agreement correctly? And then lastly, if you stick around to the very end, I'm going to go and give you a little known trick if you choose the right lender on how you can save thousands of dollars on your actual closing costs when you enter into a buyer agency agreement. So first off, to cover the topic of buyer agency agreements and what are they? So on August 17th, 2024, the National Association of Realtors entered into a settlement agreement that had implications nationwide. The main implication were twofold that we'll get into. First off, being that if you are a seller of real property, you now no longer have to go and offer compensation to be entered into the MLS. The second main thing is that if you are a purchaser of real property, you're looking to use a realtor to help you with that process, you actually have to enter into a signed written agreement with that buyer's agent before they can even open up a door for you. Now, this is true not only for in-person showings, virtual showings, hybrid showings, every other kind of showing. The only thing it doesn't cover is if you're walking into an open house and there's someone there who's already there representing the seller's interest, presumably probably either the listing agent themselves or potentially the broker, someone from the brokerage that's going and hosting that open. So on these buyer agency agreements, some of the requirements that they've laid forward is that it has to indicate how much the buyer broker charges to go and represent you as a purchaser. In most cases, these forms are going to have an expiration date on them, how long they last for. They're going to indicate whether or not you're giving the buyer broker permission to go and request the compensation from the actual seller themselves in the form of negotiation. And in most cases, too, they're also going to indicate that if they're unable to go and receive compensation from the sales proceeds or the listing brokerage, that you as the purchaser are going to be on the hook for the payment of this. So this is a big changeover from historically what had taken place. Go back on a little bit of history of things. Prior to the 1990s, there really wasn't anything such as a buyer's agent. It was an idea that came into play in the 1990s due to the fact of wanting to set up some form of consumer protection. Because prior to that moment, every single person who was a licensee of real property, generally speaking, was going and working and representing the seller only. Now, what that meant was, prior to 1990s, if you're going to see a home and wanting to go and see different properties, the agent who was showing you around might have felt and seemed like they were working for you, but the reality is they were all working as seller sub-agents. So their interest was to represent the seller and the seller alone. It's where you got into a lot of issues of non-disclosures, misinformation being given out. Well, in comes the 1990s, and there was a wave of things called buyer agency agreements. And these buyers brokers, they would go through and help represent you as the purchaser. And what they did is they negotiated their compensation rate if they brought a purchaser to the property and represented that purchaser, that they would receive approximately half of the compensation that the listing broker had with the seller. And this is what went on for about the next 35 years, roughly, and worked really, really well. What it did effectively was it allowed for anyone who worked full-time in real estate as a licensed realtor to be able to go and represent the interests of a purchaser and know that they would be compensated so long as they were able to go and come to terms with the seller and bring that to closing. The buyer got free compensation, or free representation, or so it felt. The seller had their own agent representing them, and there was what was called a unilateral offering of compensation across the board, and it was published through the multiple listing service, the MLS. Now, this system worked really, really well because now what you had was, rather than just one listing agent trying to go and sell your home, you had literally thousands, tens of thousands in certain markets of agents, now all who would be financially incentivized to help facilitate and bring the purchaser to the property. This worked great, and that's why it went on for as long as it did. Now, the changeover that happens to the settlement agreement in stating that sellers no longer have to offer buyer broker compensation, all of a sudden has put a little bit of a change in the model. Now, what I'm seeing in the marketplace that we're seeing currently at time of recording, 7 months into this changeover in practice, the overwhelming majority of the market is still preemptively offering buyer broker compensation. It just can't be advertised. What I mean when I say majority, I'm saying about like 98%, if not greater, of sellers are already doing this. What has changed slightly, some sellers may not specify a pre-specified amount. They might not go and mention a particular percentage of the sales price or a particular flat fee that they're offering, anything of that nature. And what has to occur now is that the final total amount going to the buyer broker is being solidified as part of the sales contract. It's incredibly messy, to be honest. It is something that I don't think anyone really thought about as being a good idea. It just is what was thrown on our laps and not what we're dealing with. So with all this being said, there are, from what I'm seeing, the majority of buyers brokers still being compensated out of the sales proceeds at time of closing. Largely, one, because the purchasers are requesting that's the way to go about it. Two, the sellers are already anticipating having to do it. And three, it really tends to go and make just largely the most amount of sense for most people. Now, when you're going and buying a home, there's a lot of closing costs you're already contending with. If you've gone through the loan approval process, I don't need to explain this to you any further, but for those who haven't, the thing that you're looking at, you're going to have to bring money to the closing table for your closing costs, which have to deal with paying for the bank origination fees, appraisal fees, owner's insurance, bank attorney, buyer's attorney, things of that nature. You're going and paying for your down payment, which is what most people are usually familiar with, whether it be a 20% down loan, a 10% down loan, a 3% down loan. And then you're paying for your escrows. So your first year of property taxes in full, your homeowner's insurance in full, some interim interest, all those things are going and getting rolled into it. And depending upon your average sales price in your market, that's going to be tens of thousands of dollars. In some cases, more expensive markets, hundreds of thousands of dollars. Now, the idea of having to save up for that and also go and pay for your buyer broker out of pocket might seem like it's just out of reach, particularly for first-time home buyers. Now, if you're someone who is in a position where you already own a home and maybe you're selling that property to purchase a new one, you're in a good equity position, probably from the sales proceeds of the home you're selling, to go and be able to have a bit more liquidity to maybe consider paying for your buyer broker directly. Or perhaps maybe as a first-time home buyer, you do have more in savings, you're a little more flush, and you can't afford that. So what I'm going to cover today, in fact, are the 5 main benefits for why you might want to consider paying for your buyer broker out of pocket, even if the seller is offering buyer broker compensation. So the first thing I'm going to go and touch on is, most importantly, it reduces the sales price. So I don't know if anyone has went and purchased a car recently, in the last couple of years, or ever. One of the things you'll notice is that the dealership will have their cars advertised at being a certain purchase price. Let's say that the vehicle is being listed for $30,000. Now, when you go to check out that vehicle and actually get to the closing of that car, you're going to go and find that there's going to be certain fees and taxes levied onto that. There's going to be different closing costs. There's registration fees, etc., etc. So now that $30,000 vehicle didn't cost 30 grand. It cost you what, 35,000, 36,000, we'll say. Now, real estate prices, when you're looking at recorded sales prices, actually kind of work in reverse of that. We're all very familiar with going and seeing what the recorded sales price is when you're looking at sales data in the MLS or online. And what that's representative of is the gross price, the total price of the property. And that is almost in all cases showing what that home was, it sold for, and what the transfer taxes were based off of, and what the county records are recording the sales price as. That's certainly not what the seller received. The seller received that amount as the top end, the gross figure, minus all of their closing costs. That including that of paying for, more than likely, listing brokerage, a buyer's brokerage, their attorney, the transfer tax on it, various other distributions, mortgage payoff that they had to go and pay at the closing of it, etc. So when we talk about writing an offer where you as a purchaser are going and paying for your buyer broker separately, you have the ability to obviously ask for a reduction in sales price. And if you're in a multiple offer situation, you're going to go and look more competitive or be able to net the seller more money by going and bringing about a lower price. Now that has a couple great benefits to it. So the second would be if you're obtaining mortgage financing on a home. This means that you're no longer actually rolling the buyer broker fee into the purchase price of the property. Now, if you look at, we'll call it 6.5% interest going on a 30-year term, if you live in that home and pay off the mortgage over the course of 30 years, by taking that amount out, you're actually going to be paying about, 226% times less of what that cost is. So let's say out of pocket, it would be somewhere around $10,000. Over the course of the 30-year mortgage, it actually is going to go and cost you closer to $22,600 through the various monthly installment fees that you're going and paying. So it's going to go and help save you money on that end. The other thing it's going to go and do to make your offer more competitive, which is benefit number 3, not only can you come in and reduce it just based upon the buyer broker amount, it's actually going to go and save the seller a few $100 in addition on their closing costs. With the purchase price being reduced, their listing broker fee, which is usually a percentage of the sales price, is being brought down. In addition, the amount that they have to pay in transfer tax, at least here in the great state of New York, Niagara County, that's set at $4 per thousand. At Erie County, it's set at $9 per thousand. That ultimately equates to them saving as a seller about, we'll call it 1/1000th of the sales price as well. So a couple $100, generally speaking. So it has that benefit. The other thing it's going to do from a competitive standpoint and benefit to you as a purchaser standpoint, point number 4 here, is that it's going to go and help to reduce the risk of your home not appraising at time of purchase. Well, that's largely because you were able to go and secure it at a lower purchase price. When the appraiser goes out to the property to do the valuation of it, they're looking at the purchase price of this home relative to the other ones that sold in the marketplace, and it's going to reduce the chance of a low appraisal coming in. So that's benefit number 4. The last benefit number 5 that I'll cover in this video, has to deal with the fact that every 3, 5, sometimes 10 years, townships will go and do a township-wide reevaluation of the local property values to try to go and bring them up to an equitable rate. Certain neighborhoods will appreciate quicker than other neighborhoods in an area, and when they're doing these township-wide reassessment projects, they're going into data looking at the most recent recorded sales prices on homes. Now, if you transacted, you purchased within the last few years, and you once again had a lower recorded sales price because it wasn't built into, your buyer broker fee wasn't built into the sales price, when the town is going out to doing these reassessment projects, they're going to see the most recent recorded sales price on the property and have that be an influence on what your new assessment value is. The new assessment value is what they're using as their basis to go and figure out how much to go and charge you in terms of property taxes. So if you have this lower recorded sales price because you paid your buyer broker out of pocket directly, didn't roll it into the actual sales proceeds, now you're looking at having a reduction to your, more than likely, I should say, a reduction to your total property taxes, which you're paying year after year after year after year on your home. So that's another way that you're going to go and ultimately find long-term cost savings by having it pulled out of the transaction. So those are really the 5 main benefits. So just to kind of cover them again, we're looking at reduction in sales price, leading to lower monthly costs on your mortgages, leading to an easier ability to go and appraise, allowing for it all to be more competitive in a multiple offer situation. And then lastly, long-term, looking at not having to go and pay as much potentially on your property taxes for as long as you live and own in that home for. Which lastly, lower property taxes do lead to a more saleable home at the end of the day. Higher property taxes do hurt your home when you're going to sell it. So as mentioned, the last thing I was going to go and cover here is how you can use this information to go and save thousands of dollars. So since this came into place, there are certain lenders that want to work in support of the overall real estate industry, and they entered into some agreements with different brokerages indicating that if you have a purchaser that's entered into a signed, written, exclusive right to represent buyer broker agreement, and they go off to get a pre-approval with these particular lenders, that those lenders will actually offer a credit in the form of 0.5% of the purchase price of the property to you at closing. So it's actually going to go and help reduce your closing costs when you go to buy. Now, the great news with all of this is, one, it's required by law. You enter into these agreements anyways. So really the question is, number 2, who are you going to decide to work with, and what lender do you want to work with? Depending upon which ones you decide to work with and who you choose as a lender, we can work on making sure that you're looking at saving yourself thousands of dollars at closing. So I hope this information is helpful, guys. Feel free to reach out to me if you have any questions on this topic or anything else real estate related. I try to be a real estate nerd, and I want to make sure everyone has good information about how to go about this process. Certainly, as always, the traditional model still exists. If you need to go and have it financed into the purchase price, overwhelmingly, as mentioned, it's almost always covered by the seller in most cases. We can decide to only look at properties where they are offering it. That's an option as well. Certainly, we'll make sure to go and tailor our game plan and our shopping of what you're looking for tailored to your financial needs and your desires. So, as mentioned, feel free to reach out. Love to go and field any questions. And whoever you use, just make sure you're using a good agent. So, thanks, guys.